Major protests and riots are breaking out across the United States. What started in Los Angeles has spread to dozens of other cities. Larger cities like LA, we're even seeing significant looting and property damage. In this video, we will review why this is happening, and how investors can invest in companies like firearms or law enforcement equipment manufacturers to benefit from the chaos, as unfortunate as these situations are. There are a variety of protests springing up across the country because of increasing immigration enforcement raids by U.S. Immigration and Customs Enforcement, aka ICE. All these protests and riots are against mass deportations, which could ramp up dramatically depending on whether the recent Congressional Reconciliation Bill gets passed. This includes around $150 billion for various enforcement measures like the border wall, detention facilities, new ICE agents, etc. If that bill passes and arrests ramp up even further, then so will the protests over the next few years. Debating the politics or morality behind what's going on should not be our goal here as investors. We're here to look at the facts and invest based on what we see. So that's what we'll do. The civil unrest first broke out in Los Angeles on Friday, June 6th. Federal authorities launched a series of coordinated immigration raids across the city. Targeted locations included the Los Angeles Fashion District, warehouses, street vendors, and more. Protesters quickly gathered outside federal facilities, including the Metropolitan Detention Center and the Edward R. Roybal building in downtown Los Angeles, where detainees were reportedly being processed. And downtown LA is getting pretty ravaged at this point. The military and the California National Guard were called in by the thousands to help quell the riots. It's gotten so bad recently that a curfew is being implemented in downtown LA from 8 p.m. to 6 a.m. Obviously, it's unclear how long the unrest will continue for, but there's a pretty good chance that riots continue to flare up during the rest of Trump's presidency. Things were surprisingly tame when Trump initially won the election, but it seems protesters are getting energized again with immigration enforcement ramping up. More recently, the No Kings protests were held to create a contrast against a scheduled military parade in Washington, D.C. Millions of people across the United States protested in over 2,000 locations, and while most of the events were peaceful, riots still raged on in places like Portland and Los Angeles. Now the question is, will the Trump administration continue the deportation efforts, or will they back off because of the backlash they started to receive? As I'm recording this video, it seems like the answer is both yes and no. Trump recently announced that they would pause immigration raids on employers like farms, hotels, and restaurants. And what I don't understand is why this was a surprise. Obviously, employers that employ illegal immigrants are not going to appreciate deportations, so what are we even doing here? According to the U.S. Department of Agriculture, around 40% of the crop farm workers in this country are not legally allowed to work here. So, surprise, the agriculture industry is not going to like what Trump is trying to do. It was clear that'd be the case, so why are we even bothering with deportations in the first place if they were just going to pause them at the first sign of pushback? Yeah, it makes no logical sense, but it does seem like Trump is backing off in that regard. On the other hand, Trump is saying that he wants to increase arrests in large cities like Los Angeles, Chicago, and New York. I think that, especially with the possibility of massively upping the funding for immigration enforcement, we could definitely see unrest continue. Probably not continuously, but protests and riots would likely spring up over the rest of Trump's presidency. And what did we see in the riots of 2020? We saw 8.4 million new Americans buy guns that year, 40% of them citing civil unrest as the primary reason. It would not surprise me at all if that number was actually far higher than that. Since 2020, over 20 million new Americans made the same decision, so gun purchases have increased massively. Additionally, while police budgets were getting cut at the time by some large cities in 2020, those budgets were eventually restored and actually increased in places like New York, Los Angeles, and Austin. So it would be reasonable to expect that same trend to occur again if we see consistent unrest in the country. More gun buying as unrest continues, higher policing budgets and equipment purchases, as well as possible beneficiaries from increased funding for deportations. So let's review some of the companies you can buy to benefit from these trends. The most obvious beneficiaries of unrest in the United States are the gun manufacturers. You can guarantee that if people feel unsafe, then gun sales are going to shoot through the roof. Our first stock to consider is Smith & Wesson, ticker SWBI on the Nasdaq, with a market cap of $470 million. They produce pistols, revolvers, and modern sporting rifles. By volume, they provide the third largest number of personal firearms in the United States at 991,000. The stock performed incredibly well during the riots in 2020. From May to August 2020, the stock shot up 153%. So we know from historical performance that they tend to do well in times like these. Sturm, Ruger and Company is another one, ticker RGR on the New York Stock Exchange, currently sitting at a market cap of $623 million. Ruger is the largest manufacturer in the United States, with over 40 different product lines and variations of rifles and pistols. Ruger also acquired Marlin Firearms for further expansion. Product-wise, Ruger is the most diversified and largest option for firearms over something like SWBI. During the same time period, May to August 2020, Ruger's stock price was up 58%. So RGR and SWBI are the two main gun manufacturers you can get exposure to. In terms of other options, all of the major ammunition suppliers have been bought out, except for Olin Corporation, ticker OLN on the NYSE, market cap of $2.3 billion. This company owns Winchester and has expanded its ammo production capabilities by buying a large manufacturing facility from Ammo Inc. With that said, Olin is probably not as great of a play because it's more diversified. They also operate vinyl and epoxy divisions, which are totally unrelated to the firearms sector. But if you're more open to a diversified play, then Olin is an option for you. The company that sold them that manufacturing facility, Ammo Inc., has rebranded to Outdoor Holding Company, ticker POWW on the Nasdaq, market cap of $167 million. This company is transitioning away from the ammunition business to focus on developing the largest gun brokerage platform in the country, gunbroker.com. The sale of its ammo business has given them a large cash pile, as they sold it for $75 million. So if you want a higher margin online option to get exposure to the oncoming influx of firearm sales, then this company is another option. The second sector we have to invest in to benefit from these riots is equipment manufacturers and suppliers for law enforcement. There are growing efforts to get cops to use less than lethal means to subdue suspects, so we can explore both those and traditional suppliers. The first stock to look at here is Axon Enterprise, ticker AXON on the Nasdaq. They're at a $60 billion market cap at this point, and Axon is the producer of the Taser, which is obviously used by nearly every police department in the country, and this stock also holds a near monopoly on supplying police with body cameras and benefits from offering the software that stores all that footage. So they supply the body cameras and then maintain high-margin software revenues for content management through cloud services. They should be a consistent winner in times of civil unrest and calls for accountability in policing efforts with accessories like the body cameras. Sound Thinking, ticker SSTI on the Nasdaq, market cap of $200 million, offers critical technology in more crime-ridden areas like Chicago. Their primary offering is ShotSpotter, which is a real-time gunshot detection system that alerts the police of the location of any potential gunfire in the area. This company is more dependent on searching for new solutions to combat consistent crime rather than short-term riots, given their technology. But this is another possibility to consider if you think the large cities in the US will grow increasingly violent over time. Moving on to the less than lethal options, we have WRAP Technologies, ticker WRAP on the Nasdaq. Sitting at a market cap of $88 million, this company produces the BolaWrap, which is a device that shoots out an 8-foot tether cable that wraps around a subject's legs or torso, totally harmless. So instead of needing a taser or a firearm, police can subdue a target without needing to resort to means that could end up hurting someone badly. Adoption is largely dependent on police departments running pilot programs, so it's a stock to watch. Another less than lethal weapon option is Byrna Technologies, ticker BYRN on the Nasdaq, market cap of $700 million. This stock has been taking off recently after announcing record revenues. And instead of producing something like the BolaWrap, the company created CO2-powered launchers that resemble handguns, but they're powered by CO2. And instead of firing actual bullets, these carbon dioxide-powered launchers fire .68 caliber rounds, which could be genuine kinetic rounds or chemical irritants. This is a clear alternative for people that want to protect themselves, but do not want to risk potentially harming someone in a lethal way. Lastly, if rioting gets really bad, then another potential winner could be Brinks Company, ticker BCO on the NYSE, market cap of $3.6 billion. This company operates a network of ATM or cash processing services, but the interesting aspect to their business is that they also offer armored car transportation services for moving cash. If unrest continues to get worse, then this company would benefit from moving all that cash around under increased protection for businesses. With that said, this is a pretty diversified stock since they offer their services in over 100 different countries, so it's not like you're buying a company that's just focused on the US and would see explosive growth from that aspect. But like I said, it's another option in the scenario where things get extreme. And all the stocks mentioned in this video will be listed in a post on my Substack in the description, and Brinks was the last one that we'll go over for this video. So with that said, if you want to stay up to date about these significant market moving events like this and learn about different potential investment opportunities to take advantage of them, then subscribe to this YouTube channel and check out my Substack. Links in the description. Thanks for watching.